Hi guys, I'm back again. Since I wasn't able to switch the camera around last time, I decided let me try it now. This is sort of part two on the new programs that I see to help cut back on PMI and help people afford a more expensive, well, a home that's a little bit more costly in the neighborhood that they prefer. If you look at the chart, you can see that I started with a home that costs $100,000. And I let you know that if the home costs $100,000, the bank typically wants you to make a down payment of 20%, which is going to be $20,000. When you do that, your PMI is 0. Your mortgage payment, going according to today's rate, is 4.7, and you'll be paying $415 a month. The second line shows that same house, but you are only able to make 10% down payment. You don't have any help from any program. So because of that, the bank is charging you, and I'm being nice by saying 1% PMI, which is private mortgage insurance. They can charge more. And I'm showing you that if you put down less than 20%, not only will your PMI be $200 extra a month is what you'll have to pay, you'll be paying $667 a month, and at the end of 30 years, you would have paid the bank $72,000. Now with Unison, I'm doing the best that I can, guys. That same house that costs $100,000, you're only able to put down 10% because that's what you can afford. And 10% of $100,000 is $10,000. What Unison does is it matches your $10,000 so that you don't have to pay any PMI because you've met the down payment requirement. So you pay $415 a month. But due to the fact that it is a partnership, at the end of 30 years, you will have to pay them anywhere between $17,000 to $34,000. And as you can see, that's a lot less than $72,000, which is what you would have had to pay if you just went with the bank and you put down less and you didn't partner with them. So I think that's a very significant difference. Now, own home finance is not a partnership. Own home finance is a loan. And they will take your 10% down payment, but they will not charge you PMI because they'll take 10% from your equity. And then at the end of 30 years, you only have to pay them $25,000. That's still a lot cheaper than $72,000 that you would have to, that you would be paying if you went to a bank and paid that PMI. In addition to that, whatever additional money you have, Own Home Finance has an elective IRA program. And they match you half of the money that you put down. So if you put down $200 a month, they'll pay $100 a month. And at the end of 30 years, if it's $100 a month, that's $12,000 that they've given you towards your IRA. And then, as you know, IRAs gain interest, but the interest rate on that varies from time to time, and it depends on what it is that you're investing in. So this was the spreadsheet that I was trying to show you guys in the last video. Thanks, David Cradle, for watching. This was the spreadsheet that I wanted to use to give you guys a mathematical visual of how much money you would be saving when you use Unison or when you use Own Home Finance, as opposed to when you just go to the bank and you just give them less money than what they require, and how PMI really squeezes you. Because I know for a fact that $72,000 could be used in some states, in some areas, unfortunately not New York, but I can take that money to Georgia, Arkansas, Alabama, and I can buy myself another house. All right, that's it, guys. That's all I wanted to show you. Again, enjoy your evening. Bye.